Axiata Group, Telenor Asia and Digi.com have successfully concluded the due diligence exercise and have inked the transaction agreements for the proposed merger of Celcom Axiata and Digi. In a joint statement, the parties said this confirms the intent to establish a commercially stronger and more resilient digital converged service provider. MergeCo, which will remain listed, will have a combined pre-synergy equity value of close to 50 billion ringgit. The statement says that on a pro forma basis, MergeCo will serve an estimated 19 million customers with revenue of 12.4 billion, pre-tax earnings of 5.7 billion, PAT of 1.9 billion and a free cash flow of 4 billion ringgit. Axiata and Telenor will each hold 33.1% in MergeCo. The parties say the integration planning phase will work out more in terms of synergies and business plans, with initial estimates indicating potential value accretion of about 8 billion on a net present value basis. Axiata President and Group CEO Dato' Izzaddin Idris says both parties are charting good progress and remain aligned in their intentions to deliver a strong value proposition. Telenor Group Executive VP and Head of Asia Jürgen A. Rostrup says this merger will bring together competencies, financial strength and scale to go beyond connectivity and further implement technology that further advances its customers' digital experience. Izzaddin will be Chair and Rostrup will be Deputy Chair of MergeCo, which will be named Celcom-Digi upon shareholders' approval, with Idham Nawawi as CEO and Alban Murty as Deputy CEO. Comfort Glove's net profit for the first quarter of FY22 surged by more than 13 times to 219 million from 16.3 million previously, thanks to higher sales volumes and average selling prices, as well as better economies of scale. Revenue skyrocketed by 254% to 541.2 million. The group declared an interim dividend of 4 cents per share. Comfort Glove says 4 double former dipping lines were commissioned during the quarter, with a plan to commission an additional 7 lines, which are expected to be completed by end January 2022. Once completed, the glove maker will be capable of producing up to 8.6 billion gloves per annum. Comfort Gloves expects global glove consumption to increase in the long run as a result of a continuing increase in the usage of gloves since the pandemic. The group says it intends to capitalize on this opportunity to develop a steady customer base. Selling pressure on electronics manufacturing service provider Attas Ims continued despite its major client Dyson denying allegations that its products were made using forced labour. In early trade, the counter fell by as much as 20 cents or 7.3% to 2 ringgit 53. Despite paring some losses, the stock still ended the day 5.1% down at 2 ringgit 59, with 6.9 million shares changing hands. Dyson is disputing allegations made by UK-based paper The Sunday Mirror, namely that workers of Attas Ims are forced to work up to 186 hours overtime a month in cramped conditions. According to a Dyson spokesperson, based on its regular audits as well as regulatory filings by Attas Ims, it is confident that the allegations do not relate to Dyson's supply chain and that its products are not manufactured by workers living in these alleged conditions. In May, Attas Ims had denied that it had used forced labour in its manufacturing process and that its recruitment practice is fully compliant with international best practices and believes that it provides good living conditions for its workers. Focus Dynamics Group has subscribed to 138.05 million rights issue shares of Saudi Group, equivalent to a 19.4% stake. In a statement, the group said the share subscription was pursuant to the Memorandum of Understanding inked by the two companies in relation to rolling out of a robotics-based manufacturing facility and the development of robotic burger kiosks. The parties have set up a working committee to jointly develop the technology, aiming to launch the robotic kiosks within 12 months. It said the kiosk will feature seamless and automated functions such as providing accurate measurements of dressings, grilled meat patties and toasted buns at automated kiosks and food trucks. The company said the outlets will be available via a franchisee model, either under its own brand or via owner-operator models. Malaysia Airports Holdings has submitted a comprehensive strategic long-term development plan for the Sultan Abdul Aziz Shah Airport in Subang to the government. MHB says it also has sufficient internal cash reserves to undertake the Subang Airport regeneration plan. The plan is premised on 3 areas of focus, namely the aerospace ecosystem, business aviation, and for it to be an urban community airport, with the aim of turning Subang into a preferred aerospace and business aviation hub in the Asia Pacific over the next 5 years. MAHB Group CEO Datuk Muhammad Shukri Muhammad Salih says that since receiving the mandate to develop Subang Airport into an aerospace park in 2005, the airport operator had grown the ecosystem by 4 times, attracting 60 brand names and facilitating capital inflows of over 500 million ringgit. He adds that the regeneration plan for Subang Airport will grow the ecosystem further by 3 times and is projected to contribute 10 billion ringgit to the national economy. According to Muhammad Shukri, the plan requires an infrastructure investment of 300 million to be staggered over the next 5 years.